Well, hello, ladies and gentlemen. I'm Chris McAlpin with Sound Financial, and wow, again, what a beginning to a difficult year. We wanted to get just a mid-March client update, just so that we could speak to you because we're talking with a lot of you. But this gives us the way to speak to thousands of people very quickly and just give you an idea of what we're thinking and what we're seeing. When I last recorded, on that day, Russia had invaded the Ukraine. And now, nearly 2 weeks later, they've continued to fight. And the Ukrainians' courage and their ability to withstand the Russians have shocked a lot of people. And I respect them greatly. I pray for them. I've got friends from both countries, many years of working with missionaries in Russia and friends that are missionaries in Ukraine. It's a hard situation. But our job, and today especially, is to just look at the financial markets and see very logically what is going on. And certainly these events have shocked the markets. For the first 2 months of the year, the markets looked at and thought about rising interest rates and rising inflation. And that seemed to be the only thing that the markets were paying attention to. And we still think that those two topics will be the most important financial topics this year: rising interest rates and inflation. But it certainly seems that the markets misjudged the Ukrainians' ability to withstand the Russians, and that has drawn out this battle into a pretty nasty slugfest. And global sanctions are starting to pile in on Russia, and the market is attempting to predict events that are changing every day. And so I got this question this morning of just how much longer, Chris, can this go on? Well, number one, I don't know. Okay, I can't predict the future. You'll hear me say this a lot today and in the years to come. But number two, I would say that the markets themselves seem to be attempting to find a bottom. Okay, they're in deep oversold space, and rebalancing into an oversold space is not a good idea. Okay, it's not a time, we feel like, to make a knee-jerk reaction and sell and run away. However, we're going to talk more about that in just a minute. It seems the market on technicals alone is trying to find a bottom, but the Ukrainian-Russian war, that can still continue to put pressure on the markets and break through those bottoms. So again, I'm not predicting the market, and attempting to predict the future is one of the market's favorite topics. And since your financial future is far too important for us to play a game or to try to predict the future, how we choose what our next steps are matter greatly. And so let's look at the math. At the close of business on March the 7th, and at the recording of this, the S&P 500 was down nearly 12% in 2022. And the NASDAQ was down right at 18%. And both of those are pretty rough numbers. However, they both fall into normal correction standards. And considering rising interest rates, inflation, war, overvalued markets, certainly we could paint a pretty ugly picture. But let's look at more, okay? A hypothetical 50-50 investment portfolio of NOBL, which represents an S&P 500 dividend index, and PTBD, which represents a rules-based bond index, would be down about 6% year to date, which is very similar to our moderate and conservative investment models. -6%, -7% in a market like this is not that bad and should not affect your long-term investments if your investment model fits your financial plans. Now, little side note here, if you're in the growth model like I am, you've seen a little bit less than 6%, okay? It's gone down a lot further, all right? But be patient. Let the models rotate and do their job. We have investment models that we've tested out over years of ups and downs and years of risk that included global pandemics and included other wars and included other market corrections and other bear markets. And so as I was talking to the guys today, if we're making emotional decisions today based on gut instinct that does not have discipline, or do we want to make decisions based on investment models that have been tested out over years? I'll go with the second one every time. But when you're looking at the growth investment model, I get it. That can be kind of tough. And as I said, I'm looking at those models myself because I'm in them. But I don't want us to rebalance into the teeth of an oversold space in a market that has a very possibility of a rebound. So let's be patient. But let's look back more at what is your investment plan, because that is what's most important to us. Every investment return I've ever studied in my career, all of them have downside risk. Unless you're talking about CD or an annuity, there's downside risk involved in attempting to grab upside return. And so one way to answer the questions of what we should do next is, what are the portfolio's historical returns? What does their volatility signature look like? And what is their maximum drawdown? And so let's look at or imagine a moderate portfolio, okay, whose long-term tested returns indicate the possibility of an 8.5% yearly profit. Now that's averaged out, smoothed out over a long period of time. Would that be a good return? Would that help you reach your financial goals? Now, if that investment also had a volatility range of -6% to positive 23% over any rolling 12-month period of time, and in that same 10 or 15 years, it had a maximum loss of, say, 12 to 15%. That's called a max drawdown. But again, it goes back, keep in mind, it's averaging that 8.5% a year. Would you accept that risk and volatility? That's the question you got to answer. So does that 8.5% annually help you make your returns? And if the answer to that is yes, does that fit your financial plans? If the answer to that is yes, can you accept the risk and the volatility? If the answer to that is yes, then you're possibly in a good financial model, or you're in a good investment model. Now, my question for you is, what are your financial goals? How much return do you need to reach those goals? How much risk are you willing to take for your financial plans to possibly be successful? And I keep throwing the words possibly and attempt like that in because we can't predict the future, but this is the best that we got, to look at history and plan for the future. Your plans and your discipline and how we work together, those are what matter most. Because we have stocks, bonds, mutual funds, ETFs, we have annuities, we have a lot of different tools that we can work together to get you into the financial plan, into the investment portfolio that fits you the best. So I challenge you and I ask you, meet with your advisor, have this conversation with them. I know there's a lot of bad news on the news, but don't just get hung up in that. How do we work together to make sure that we get you in the very best plan possible for you? Because you have been blessed tremendously with great resources and great opportunities, and it's an awesome blessing for us to get to serve you in this. And we appreciate your trust that you put into us. And so we want to work hard for you and work for you well. Let's talk soon. Take care. God bless.